Welcome to Speidel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering changes made to the state and local tax deduction limitation under the One Big Beautiful Bill Act. We'll be covering the provisions of the Act in detail at Speidel's Federal Tax Update webinar on December 18th and 19th. For more information and to register for this 8-hour update, go to Speidel.com. Under the One Big Beautiful Bill Act, the Tax Cuts and Jobs Act $10,000 state and local tax deduction limitation is made permanent. OBBBA gives the limitation a temporary increase that is subject to a modified AGI phase-down. Under OBBBA, the SALT limitation is increased to $40,000 beginning with the 2025 taxable year and increases 1% per year above the prior year's limitation through the 2029 taxable year. The $40,000 cap applies to all taxpayers other than married taxpayers filing separately, whose deduction will be limited to $20,000 or half of the limit. The SALT limitation reverts to $10,000 or $5,000 for married filing separate, beginning with the 2030 taxable year. For taxpayers with modified AGI above certain AGI thresholds, the increased SALT limitation is phased down for the 2025 through 2029 taxable years, but not below $10,000. The SALT limitation is reduced by 30% of any excess of the taxpayer's modified AGI over the threshold amount, or half the threshold amount in the case of a married individual filing a separate return. For 2025, the phase-down threshold is $500,000, and it's fully phased down at $600,000. The threshold is increased by 1% over the prior year for the 2027 through 2029 tax year. Because the deduction cannot be reduced below zero, taxpayers with income above the phase-out threshold are still eligible to claim a $10,000 SALT deduction. Both the original version of the bill passed by the House and the original version of the bill introduced by the Senate Finance Committee would have placed restrictions on the pass-through entity elective tax available in the vast majority of states, as well as other SALT limitation workarounds that have been developed. Although the bullet for these workarounds appears to have been dodged in the final version of OBBBA, it's important to note that this may not be the end of the saga. The pass-through entity elective taxes were developed in response to the IRS's guidance in Notice 2020-75, which essentially gave the green light to the federal tax deduction for these taxes. At the time, the IRS indicated they would be issuing final regulations that would officially adopt the position taken in Notice 2020-75. No regulations have yet been issued, and we know that pursuant to the President's executive order directing federal agencies to review previously issued guidance, the IRS is closely scrutinizing previously issued guidance to determine whether positions taken were actually supported by law or have been otherwise obsoleted. We'll have to see if Notice 2020-75 survives this scrutiny. At Speidel's quarterly federal tax update webinar, you'll get all the news you need to keep your clients current, as well as new tax planning strategies to minimize taxes throughout the year. Sign up for all 4 or just a single session at Speidel.com under webinars. That's all for this week. Join us next time for another episode of Speidel's Federal Tax Minute.